Tej, why is Marcellus launching a financial sector fund right now? We are still not fully out of the COVID crisis. Banking sector NPAs will only rise, whether it is for weak banks or strong banks. Economic growth is weak, so that banking credit growth will also be weak. So why should somebody invest in a financial sector fund right now?
So there are primarily 2-3 reasons behind this. If we break down the financial sector, especially kings of capital, into two parts, one is lending, the other is non-lending. So what we are seeing on the lending side is that about 60-65% of the lending industry is banks. So while at a sector level, the banking credit outstanding is about 110 lakh crores, and the capital outstanding at a sectoral level is about 11-12 lakh crores. That's about a 10-11 times leverage. While the stocks in our portfolio, whether it be a HDFC Bank or a Kotak Bank or a Bajaj Finance, they are leveraged only about 4-5 times. So at a sectoral level, they are leveraged about half of what the sector is leveraged. So while these PSU banks still have 65% market share, as we proceed over the next 5 years, 7 years, we expect the share of these PSU banks to come down to at least 50%. And that will straight away go to these top quality, high quality lenders who are well capitalized and are well poised to consolidate market share. So it is a given that yes, as the COVID crisis unfolds further, we'll see a rise in NPAs. However, because these banks are at a capital adequacy of 20-25%, they'll be able to easily absorb these NPAs on their balance sheets. While the other lenders, which are leveraged 9, 10, 11 times, will struggle to absorb these NPAs, and that is what will lead to consolidation on the lending side. So that is reason one on why someone should invest in the financial fund right now. The second reason is that what we've seen in the past is every time there is an American recession, we see an Indian economic recovery. So only when there is doom and gloom all around have we seen in the past 4 times in the past 4 decades, that there has been an Indian economic recovery. And there are 2 reasons behind this. One is every time there is an American recession, we see oil prices crash, so that's cheap oil. And the second is we see the US bond yields start falling, which is cheap money. So we are well poised for an Indian economic recovery as well. So that's reason number 2. The third reason is that on the non-lending side, what we have seen for the first time in the Indian financial sector is that we also have a lot of non-lenders available in the listed space. So whether it be asset management companies, life insurers, general insurers, brokers, wealth managers, all of these non-lenders have been listed only since the past couple of years. And there is a long structural opportunity in front of us where these high quality non-lenders, whether it be insurers or asset managers or brokers, will over the next 5, 10, 15 years consolidate market share, not only in terms of within the sector, but also because of the financialization of Indian savings over the next 10, 15 years, will also grow at a rapid pace. So therefore, 3 reasons. One is Indian economic recovery after an American recession. Second is consolidation in the lending space. And third is financialization and the opportunity to invest in non-lenders, which is for the first time that Indian investors are seeing.